Hello, everyone. Happy 2023. Happy New Year. I haven't been feeling well these past few days, so I obviously haven't been streaming. And I'm going to see how I feel tomorrow as well. I'm not going to force anything. And yeah, we're going to see how I feel. But 2023 is going to be our year. So everyone that's been following, everyone that's been following the journey, that's been supporting everything like that, 2023 is going to be our year. And one little thing that I want to say is artificial intelligence. The only two industries that have not been targeted by artificial intelligence that don't have a consumer side product is the finance industry and the healthcare industry. You can judge why those two industries haven't had consumer side products, and in the past, when those people do try to work on products in those industries, what happens to them. But yeah, to make everlasting change, you have to take big risk, and that's what's going to end up happening. So I hope you guys are interested in what's going to end up happening. That's all I'm going to say. There's that. So yeah, let's take a look at the overall market. All right, so first of all, we have news that comes out in the next 2 mornings that is most likely going to cause shifts in the market. So at 8:15 and 8:30 in the morning tomorrow, we have important news, and then Friday morning at 8:30 as well, we have more important news. Then at 10 a.m. on Friday, we have important news as well. So we have to keep that into account as we're trading on Friday. All right. So first of all, I want to take a look at the bonds. So we know that if the bonds are doing well, then the stock market should also be doing well. Now, ideally, we want to see the bonds continue to break above new highs, and especially above these levels of resistance. So if the bonds can start really breaking above those two levels, I think that finally the market should continue showing some strength, because at the moment, clearly you guys have been enjoying trading within a very tight range. There has been a very, very tight range this whole beginning of the year and end of the year. So hopefully, if the bonds can start showing some strength, then that should translate into the overall market. And basically, we'll see how that turns out. But aside from that, I mean, you know, so here's the thing. As we get closer to an upper level of resistance, technically, if there is weakness in the market, you start going short at these levels here and just have a tight stop loss right above it. So you could go short as we got close to this upper level of resistance here with a 389 or 390 stop loss, and that would still be considered a very good trade. So today we had a high of 386. Yesterday we had a high of 386.50. The high of this range is 387, 388. So, we're consistently showing weakness, but at the same time, we're also making higher lows. So at the moment, it's sort of difficult to see what is happening. But on the macro level so far, we have the Bank of Japan, Central Bank of Japan is buying bonds. We have the Chinese market at highs, basically. They're doing quantitative easing, and things are looking really, really good for the Chinese markets. We have the bonds starting to bounce. And overall, I would be very, very surprised. Personally, I would be very, very surprised if this makes new lows. Personally. Because that would set up early year amazing dip buying opportunity. But yeah, if we end up breaking down these lows, so overall, I am bullish for the next few months. I could be completely wrong. I could care less, but it would just be so unlikely with all of the things happening internationally right now. The European markets are doing really, really well. We can take a look at the German markets. German markets are clearly doing really, really well. The Chinese markets are clearly doing really, really well. We look at BABA. Oh, man. Sold BABA a bit too early. We sold BABA at 100% gain, 120% gain, I think. We bought BABA down here at below $61. And these guys ripped it above 100. But yeah, it is what it is. Regardless, overall, the international markets, everything is doing really, really well. But it hasn't really translated in the US stock market, primarily due to the weakness in Tesla. and Apple as well. So Apple and Tesla have been taking a big beating. This is not really looking too good for Apple. I mean, in terms of momentum, you can see that there's a lot of bearish momentum still left in Apple as well. Yesterday we made a completely new low and closed below, and now, you know, it's tough. So basically, when you're looking at this chart, immediately, the only thing that could help bring this market up is extreme buying pressure. So the only way that this happens is if there's going to be extreme buying pressure. So you could go long with a stop loss at these lows here, and just have a tight stop loss basically. And basically key off the fact that all the international markets and stuff are doing pretty well as well. And regardless of the weakness in the US market, these could all potentially just be good dip buying opportunities for a retest back up to, you know, 135, 137 area. Similar in Tesla. I'm not really sure about Tesla, but this is looking like, usually when there's extreme weakness like this in the US markets and the international markets are doing well, especially if the dollar isn't getting completely decimated, then it usually leads to some sort of a bounce. So now when you're looking at the dollar is still ranging, so it's not getting completely decimated, and it's not a complete risk off environment at the moment, because there's quantitative easing going on in international markets. So yeah, I mean, it's when you're taking a look at the large tech stocks, there's weakness across the board. So Amazon, Google, Microsoft was the weakest actually. So Microsoft usually outperforms the other tech stocks as well relative to what's going on. So it's going to be very, very interesting in the next few days, especially Thursday morning and Friday morning, how we respond here. And then on February 2nd, basically, Apple is going to also report some news. So we might see a run up into the beginning of February, end of January. So a lot can still happen before that. Basically, very interested to see what happens. The NASDAQ is still trading within this range here. We're still making higher lows technically. And then the IWM is also starting to show some strength, relatively the strongest compared to the SPY and the NASDAQ, obviously, because the NASDAQ and the tech stocks were taking a big hit. The other interesting thing that I want to take a look at is the crude oil and XOP. Basically, this sector has been taking a huge hit as well. So the fact that all of these sectors are taking huge hits, but the IWM is showing some strength, the international markets are also showing some strength, and the SPY is still knocking on top of resistance. Technically, right over here, technically it makes sense to start leaning a bit bearish. But the fact that all this stuff is going on, it's you're basically gonna be forced to basically either go long Apple and these other tech stocks at support, or you could go short here with like a tight stop loss, and then as we break above support, you could end up going as we break above the stop loss, and if the shorts don't work, we have a very tight stop loss, tight range, a tight invalidation area where we can flip bullish again. But overall, I would be very, very shocked if they end up making a new leg down early on into the year, because once again, soft landing, they would want it to rip up first, because everyone across the board is saying that 2023 is going to have a recession within the first 3 quarters, or at the latest within the end of 2023. So if they start off the year by making new lows, say for example we end up falling to like 360 to 365, we might end up getting a bounce back up to 380 over here, and then another leg down. So I would be very, very surprised if they rip it down now. Instead, it makes more sense for them to rip it up to 395 to 400 at least, get a bit of a pullback to 390, and then continue up. And basically Q1 might be bullish heading into basically like February and March, but I would just be very, very surprised if they end up bringing it lower. So there's my thesis for that. I hope you guys enjoyed today's video. But overall, you know, the fact that Apple is very, very overextended to the downside, Microsoft is very, very overextended to the downside, the SPY is still holding strength while the large tech stocks and everything are taking a beating. The bonds are showing strength, and the international markets are showing strength. Makes sense to lean bullish, in my opinion. So yeah, let's see how that plays out. Hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. I will see you guys tomorrow. Thank you.